All right. Well, first of all, thanks all for joining for this panel. I think we've got a very interesting panel here if you look at who we have on the stage. So let me do a very quick introduction. We've got Saltukhan from WePlay Ventures, Kinga from Erebor, Caglar from exmox, Ilya from the Game Fund, Barış, and I always get this name almost wrong, Bogazici Ventures. I'll let everyone do a very kind of quick introduction, and then the topic of this panel is new investment climate, which also kind of probably means there is an old investment climate or something has changed, and that's something that we're going to kind of have a bit of a deeper look into. What has changed and what does that mean for investors in games, and what does that mean for game developers, publishers, or other kind of companies in the industry? So let's do a very kind of quick introduction, everyone. If you could just kind of say, kind of which company you represent, what your main focus is, and then we can kind of dive into the topic properly. So, Saltukhan, please.
Thank you so much. My name is Saltukhan. Hello, guys, again. I'm working with the WePlay Ventures as an investment management lead. WePlay Ventures just focus in the gaming startups, and we just invest in the core game developer studios. We don't invest in the other game tech companies, actually. And the platform, it doesn't matter to us. We can invest in the all platform, mobile, PC, console, Web3, all of them, it's okay for us. And we established in the 2020, and right now we have 15 gaming company, and we have one exit. And until this year, we increase our investment region. Right now, we will invest in the all Europe, Turkey, and Central Asia. And we have two main steps actually before the investment. The first one is our acceleration program for the pre-seed and seed stage. The other one is our digital platform. It's called WePlay Stars, actually. And I can tell you about the more detail after. Thank you so much.
That's fine, thanks. Kinga.
Hi, my name is Kinga. I work for Erebor Capital. We also invest only in game developers. We are equity investors, but we only do premium games. We don't do mobile, we don't do crypto, we don't do Web 3.0. We mainly do only PC and consoles, and handhelds is open for us as well. We invest on early stage. We prefer to be in the company before the first game is developed. From our investment portfolio, you may know Star Wars Industries, which produce a game called The Invincible, which is published by 11-bit Studio this year.
Yeah, I have my own mic. Hi, my name is Caglar, and yeah, the pronunciation is quite difficult, Caglar. I know even in Turkey, but anyways, I'm in the industry since 2012. I used to work for Good Game Studios. We got acquired by Stillfront back then, and I was supporting Stillfront back then. We didn't have an M&A team there. When we were the first big acquisition for Stillfront, supporting the M&A activities there. And a year and a half ago, I joined the company that my brother founded, exmox, and I was able to support exmox to grow from 7 employees to right now over 40. We also sold exmox to a group called Ionic, and I'm also supporting right now Ionic with M&A activities. And Ionic Group is not so well known. It's not that we are doing a lot of PR stuff, but Ionic is right now 730 people big, 7 companies acquired, and we are still acquiring. And we are kind of trying to do to become one-stop solution for game studios that wants to have an environment from developing support to publishing, marketing, monetization, and that's kind of the vision that we have at Ionic. And yeah, that's in a nutshell.
Hi everyone, my name is Ilya. I'm one of the co-founders and the managing partner of the Games Fund. The Games Fund is a $50 million early stage gaming-focused venture fund. We invest in early stage gaming companies both on PC, console, and mobile platforms, both premium and free-to-play. We don't do Web3. But anything that you can consider a core game, that's interesting to us. And we launched the fund in April 2021, and so far we invested in 18 companies. So we're quite active. And yeah, we prefer to be first money in. We invest early, even on the DAC stage. And we're kind of boutique style fund, so we provide personal touch to all of our portfolio companies.
So, hello everyone, I'm Barış from Bogazici Ventures. I am one of the co-founders. Well, me and my partners, we are coming from gaming industry. After our exits in gaming, we established Bogazici Ventures. That's why, as a result of it, gaming is one of our focus area. But we do mostly early stage tech investments, but we also do some pre-IPO stage, late stage investments as well. We have a couple of funds targeting different verticals. But of course, our passion is gaming. Mostly we do investment in mobile gaming, but nowadays we are also looking into VR and PC at an experimental stage, let's say. We also have a venture builder, especially for Web3. That's why we are also active in Web3 space.
Okay, well, thanks everyone. So let's dive into the main topic. So new investment climate for the video games industry. And as the subtitle kind of says, risks, constraints and opportunities. So quite a lot. And I think what I would like to focus on is like, where are the kind of the opportunities? Because that's probably most interesting. So let's see if this works. This is supposed to get me to the next slide, but maybe someone in the back can kind of press it onto, next one, please, because I think we've covered this. Next slide, please. Yes. So because we have a fairly long title, New Investment Climate in the Video Games Industry, I initially started out, well, maybe I should prepare something, write it out, or do some slides. I kind of started with that and then got kind of distracted or bored. I'm not entirely sure. And so let's not do slides or too much of a presentation. I kind of reminded myself that sometimes a picture says more than 1,000 words. So if we can move to the next slide. Yes, hopefully everyone can see this. So what we have here is, when I said we're talking about the new investment climate, it's probably good to look back a little bit on where did we kind of come from. So if we're talking specifically about investments in games, what I thought would be helpful is to have a quick look at what has happened in the VC gaming market. So I've got two charts, and I think those pretty much sum it up what is kind of going on at the moment. If you look at the first chart, gaming VC exit activity. So what that is showing is year by year, the number of exits in games and the kind of the deal value of those exits. And what you can see there is it's been kind of steadily growing in terms of deal count from 2013 to 2019. Kind of deal value has also kind of gone up kind of over the whole. There have been some years with like bigger exits that slightly distort the picture. But if you then look at 2020, you see something has kind of fundamentally changed. Deal count has gone up a bit, but exit value has gone up a lot. Now, obviously, 2020, there was a pandemic, a huge inflow of players into the industry, lots of kind of opportunities there, and also lots of demand from investors. So 2020, probably a good year for exits, especially on the kind of on the public market. So there were plenty of IPOs, plenty of special purpose acquisition companies, spec deals around. And that has been fueling an enormous boom on the kind of on the exit front. What happened after 2021? Things started to cool down a lot. You can see the kind of the value of exits almost halved. Strangely enough, the number of exits has been increasing by almost 2.5, which also means that kind of deal value per transaction probably was at like 25% of where it was before. So things started to slow down in 2021. 2022, obviously with the kind of Russian-Ukrainian war, economic crisis, inflation, it got a lot worse. Public markets effectively shut down. Debt markets became a lot more difficult. And what you see in 2022 is that exit value has kind of completely slumped to, I mean, 2 billion, still a big number, but compared to previous years, it's not a lot. Deal count, almost half, which means valuations have really gone down a lot. And why did this happen, and why did this happen so fast? I mean, if you look at some of these exits before, were largely driven by public companies that were buying up privately held companies, paying in shares, paying with cash that had been borrowed in the kind of in the debt markets. Share prices of those companies started to tank, so it became impossible for them or unattractive to do more larger acquisitions and pay those with stock. Debt markets were shutting down, so a lot of these kind of transactions started to fall through because acquirers could not raise the funding. So deal value and deal count was started to take a dive, and 2023 so far is not looking a lot better. Certainly not on the kind of on the exit side. Why am I kind of telling you all this about kind of exits? Because there's a second chart which shows the kind of the gaming VC deal activity. So that's investments going into the sector. Now this chart is done quarter by quarter. And what you can see here is that in 2020, so the year where there was this enormous spike, yes, there's more money going in. I mean, the second half of 2020, considerably more money going into gaming. Then if you start to look at 2021, a lot more money flowing in, even though on the exit side, things were already starting to cool down quite a lot. And then this might be somewhat surprising. Q1, Q2, Q3, 2022, while the market was already tanking, there's still a lot of money flowing into games. And then activity on the funding side started to slow down a lot. I think at that point, it became quite clear for a lot of investors that the market was going down. It was not going to kind of go up anytime soon. And everyone started to kind of hold fire. So what does that mean for investors? So investors started to kind of slow down activity. They started to become a lot more kind of cautious because they couldn't see the kind of the exit opportunities opening up anytime soon. Public markets were shut. M&A activity was down. So yes, they had already invested in a good number of companies. So a lot of VCs are starting to shift their focus on, okay, fine, let's fund the companies that are already in our portfolio. We probably have to hold on to them for longer because the exit market is kind of not there at the moment. And kind of dedicate more resources to those. So that obviously affects the amount of capital that is becoming available for startups that are looking to raise money. It also kind of affects valuation, because valuation has clearly come down a lot, and that's both kind of on M&A as well as on kind of pre-money valuations on new fundraisers. So what does that mean? And here's where I'd like to kind of tap into the panel a bit. So if you're a game developer, what impact does this have? I mean, and here I'd like to ask some questions on, for example, how do kind of VCs look at the market right now? What does it mean for how long does it take to raise money? Should you be looking at maybe raising sooner or raising a different amount than you would do in the past? So maybe let's start with Barış. If you could just kind of scope out a little bit of where the market is at the moment, especially in Turkey, from your perspective, and then we get to the others.
Yeah, I think Turkey still is highly opportunistic on the startups and investors' perspective. Right now, what we see is, of course, the number of investments decreasing, similar to the charts you shared. Also, the number of startups established in the country decreasing. But if we compare to the other markets, still there are lots of opportunities here. We see multiple good new early-stage startups, some even late-stage investment opportunities in the market. So still, it's an active market. Still, investors are active here. It's not like totally freeze, totally hold. Yes, it is slower. It's not like a gold rush. Maybe a year ago, 1.5 years ago, it was like a gold rush. If you say, hey, I'm a gaming startup raising money, just a couple of weeks, you close the round. It's not like that, but I feel like it's more healthy. Now the investors are more questioning. There are not investors just throwing the money away to the startups, which is very healthy for us, especially. So that's why we can discuss, we can analyze the data, we can discuss, we can understand the team and invest. That's why I see it's in a more healthy state, and compared to the other markets, still it's good because there are investors, active investors. There are still active investments going on in the market. That's why that's the status. I mean, if we just compare the data, it looks like it's downsizing, it's decreasing, but still it's an active and high opportunistic market.
And in terms of how long the process is now taking when you get approached by a gaming startup for funding, from like, call it first meeting to actually closing, I mean, how different is that from, say, a year and a half ago?
Well, approximately in our case, I mean, in general, in the market, it's like in average 4 months from the first approach to the closing. It takes around 4 months. Like 1.5 years ago, maybe it was faster for some of the deals, but in our case, it was the same. Like 1.5 years ago, again, our average closing time was 4 months. So we didn't change anything. We didn't change anything how we are doing this business. But as the number of investors decreased, that's why the average closing time maybe looks like longer. But I think for the well-known investors, it's the same. Nothing changed.
And maybe Kinga or Ilya can kind of address this one. I mean, maybe the time it takes to close is still the same, but with kind of the same amount of companies pitching and fewer capital available, kind of the chances of kind of getting something closed for game developers are obviously kind of smaller. So what would you recommend for game developers in the current market? I mean, how kind of early should you kind of go out and start raising your round? I mean, if you would express this as how many months kind of runway left, would you think kind of would you leave it in the current market? So maybe Kinga or Ilya have some.
I think you could safely say that it will take up to half a year now, from 4 months up to half a year. But if you don't mind, I would like to comment on the data that you provided. Can you please get back to the previous?
Yeah, if we can have that slide with the charts back up.
Yeah.
And what particular point of the data would you...
With number of deals and the deal value. Okay, anyways, I can comment that all this data, they aggregate with some kind of lag in time. So the data that you see in the reports, so we just said that to close the deal, it takes from 4 months up to half a year. In some cases, it it could take up to a year. So what we see in these speech book reports is kind of the light from the star that already dead or something like that. So that's what had been happening like half a year or a year ago. It doesn't reflect what's happening right now. And if you take a look at the first chart and compare the deal volume and the number of deals, so you could safely say that this chart is heavily affected by mega deals. Mm-hmm. And there are definitely less mega deals that have been happening in the phenomenal 2020 and 2021. And I 100% agree with the previous speaker about it. The gaming industry is still super healthy. It's fundamentally didn't change despite some minor changes on mobile. And it's still an international business. And it's one of the best ways for local companies to make international revenues, stable international revenues, while keeping local costs. And this is especially important for regions like Turkey and Eastern Europe and other countries, where there's the kind of margin on development cost and revenue. It's huge. It's much more potential than in highly developed, like first economies in the world, like United States. That's why this region is much more attractive for investors. So I think that we shouldn't compare our current situation with 2020, 2021, because it was a phenomena. It went away. It's never coming back. And we should compare, we should analyze the bigger picture. And I think on a bigger picture, we're still healthy, growing, and we still have a lot of potential. Speaking about how we look for, how we analyze new investments, definitely there is less pressure because there is less non-specialized investors competing for the same deals, so they don't pumping up valuations. And we don't see the valuations that tremendously drop down, but they got healthier. There is less super expensive deals, and if there are some super expensive deals, we are more confident to just say pass and don't jump in the deals that are bad deals. But currently, I think now is the time of the opportunity for investors who have money to invest in companies, because economy, it goes in cycles. Now it's downturn, and in the closest future it will keep going down. Mm-hmm. But economy always recover. So, and if we will invest now, we'll have our companies ready for sale and the economic growth cycle. And that's actually the beautiful thing. That will be the golden age for those who have capital and balls to invest right now.
Yeah, and you mentioned that there's at the moment fewer kind of non-industry investors around, and that kind of obviously makes the process less competitive for specialized gaming VCs. And I'd like to hear a little bit more about how kind of gaming, kind of specialized gaming VCs, how you see kind of some additional kind of added value kind of compared to those non-industry investors. And for example, at WePlay, you mentioned you have an accelerator. I mean, what other things are you kind of doing to kind of support gaming companies? I mean, yeah.
It's actually have a different advantage for the startups who make the investment focus just for gaming focus, because our all network and all partners, all mentors from the gaming sector, and it can be really useful for our portfolio companies. And right now, as you mentioned, when WePlay Ventures established in 2020, our main strategy is we said that we have to be fast and flexible. We have to make fast investment, and our structure have to be really flexible for the gaming studios. But right now, in today, we change our old structure because, as you know, the gaming ecosystem trends always changing. And it means who can adapt to the new trends, they can rely. Who can't, they can be failed. So we started our first acceleration program. It's WePlay Hub. And WePlay Hub just for the pre-seed and seed stage gaming studios. Our main focus, the gaming studios and the founders, they are really good about develop the game. But the business part, it's meaning a different work. So we wanted to support these guys about the all business part. Our curriculum, it takes 3 months. and we educate about the all business stuff and our all topics from the investor pitch deck actually. For example, the team slide, we educate about the team management, hiring process, the HR titles, what does it mean, like that. Or the market stuff or publishing stuff. We are educate about the marketing strategy, self-published strategy, and how they can work with any publishers. So we wanted to, with this program, this acceleration program, we wanted to be ready for the next investment for these gaming studios. And after this process, it takes 3 months. And after this process, who can complete successfully this acceleration program, we will add to these gaming studios our digital platform. It's called WePlay Stars. WePlay Stars like a private LinkedIn actually, who has a good potential for the investment, which the gaming studios has a good potential. We add to our digital platform, and also we add to some sector professional for this platform. And in this way, these two guys can reach out to easily. Because sometimes the gaming studios can't reach out to some publishers or some big gaming companies, edtech tool, analytic tool companies, so it can be hard sometimes. So we want it to be easy way for them. And after that, WePlay starts, we will decide we want to be invest these startups or we won't. And this whole process takes like 4 months. And in these 4 months, we can know each other with the gaming studios. We can see their potential, the founders' team potential. Because when we invest in the early stage, actually we invest in the team. Because they don't have a good metric, they don't have a good hit games before. So we invest in these guys, this team. So we want to be sure these guys can adapt to the new trends or these guys handle the old problems in the next future. So because this equity investment means it's a long-term partnership way. So we wanted to be sure their potential and also they can learn about how we can support these gaming studios. Mm-hmm. Because this support is really important. For example, we have one exit, it's called Udo Games. And this exit takes just 1 year. It was a really fast exit because they just focus about their game, develop the game or publishing part, and also we support all other business stuff. We working like a teammate actually. Mm-hmm. And when we saw yes, it works, and we wanted to be same things for all Europe, Turkey, and Central Asia right now.
Okay, and you mentioned you're investing at seed and kind of pre-seed stage. So. What I would like to understand and what I think is helpful for game developers is also to understand a little bit on, has the market changed in kind of raising seed rounds? Because 2 years ago, we received lots of pitch decks where fairly large checks were basically being asked to effectively get the entire budget for a single game and kind of like post-release support, even in the kind of concept or pre-production stage. Is that kind of changing? Do you see kind of different approaches there? Are studios now raising maybe a smaller amount first and get a prototype or like an alpha done? I mean, Kinga, what are you seeing in the market in that space? Because I think that would be helpful for game developers.
It depends, because sometimes developers are irrational. They are trying to build a huge game, the dream game, which you never want to found, because the dream game as a first game is not the best decision. But I think we are getting back to rationality. There is no VC tourism, which we've seen in 2020. People whose strategy was spray and pray and just put the money and you don't know how the games are made. I think all of us here, our strategy didn't change because we know how games are made. And we are doing what we know. And there we're like, just thinking that making games is easy and just putting money in it. And that's why that big checks happen. Of course, there are some people still believing they can gather something like really big. But I think a lot of people right now is like, maybe let's start a little bit smaller, let's be a little bit rational, especially as I think everyone as well is talking with publishers. And we see how the checks from publishers dropped, how the publishers decide right now, let's go back to Excels, let's be rational, let's stop playing in the fear of missing out the game, because sometimes the games were signed just only because there is someone else waiting to sign that. And just by the fear that if we will be waiting too long, that somebody else will sign it. That deal was made, not just it was good deal. It was let's sign it and let's think after what will happen. And that decision results in publishers right now having games in the portfolio which is not performing well, and they are right now, as you probably know, I think almost non-publishers are signing deals without vertical slice, without prototype. Maybe they can sign if they are already working with that team before, but if they don't, they need this. And that's making developers ask for smaller amounts just to get this prototype done, just to get to the moment when you can talk to the publisher. And I think that changed.
Yeah, and I think that's a good point to kind of to take in, because if the market is harder for raising a smaller amount is probably easier to do, and especially if there's a bit more pressure on valuation, raising a smaller amount also means kind of less dilution. So taking that more kind of step-by-step approach, I think, is kind of sensible. And Caglar, how you're seeing that?
But I mean, at the same time, so the companies, the listed companies, they were also kind of forced during the pandemic because the stock share prices were increasing, so they had a lot of money and there was a lot of demand to do big acquisitions to be able to move the needle for the investors. I think that was also one big thing that also brought a lot of FOMO, fear of missing out, into the market, that everyone was ready to pay bigger checks to be able to get this big mega deals, to be able to satisfy the investors. And I think that's also gone, because after COVID, so most of these gaming companies that are listed, so they were sometimes unrealistically high valued, now dropped dramatically. So that's why also the valuations dropped. No one is able to pay this big multiples anymore. And I think that that if you would look at the prediction of in 2018-19 pre-COVID, how the curve will go, I think that didn't change. It was an abnormal growth, and now everyone is talking, oh, gaming is declining, so the revenues are declining. Actually, I think we're still on path. If you would look at the graphs from pre-COVID. So I think there's still a lot of demand to do investments, but at the same time, if you want to acquire a company, no one wants to acquire right now a company with, I don't know, 5% EBITDA. So everyone is looking to minimum 20% and a healthy growth and a proper team. So rather than, okay, let's just throw some money on this team and see what will happen, because there are so many coming, and I already missed out, I don't know, Dream, I missed out this, I missed out that. So I think that's also gone. So it's more rational, and actually it's really good that it's this way right now.
Yeah, and again, that's also something that we're seeing in the market. Companies that are being acquired right now, it's still happening. It's at a slower pace, but it's basically into two kind of baskets. There's companies that are profitable with good margins, and what we're seeing is what we would call acqui-hire. I mean, companies have been struggling a bit, and are basically looking for a new home where they can have kind of more capital to invest in product and basically turn things around. Is that kind of what you're seeing, Ilya, in your portfolio? I mean, in terms of kind of exits and kind of smaller exits?
So we're still too early to talk
Too
about
early.
exits. We're just about 2 years old. So ask me that in like a couple of years.
Okay.
But definitely there is a trend that large strategic company, they're looking for sustainable businesses focused on EBITDA rather than growth at the moment. And I don't think that it's, gaming specific. The age of Uber, like pump the valuation despite the growth and sacrifice everything for growth is generally over. Maybe it's not over, but it's on pause. And I think that investors pay more attention to economic aspect of the business. So yeah, definitely a company that are able to hit at least profitability, at least break-even point, or making some revenues and some profits for investors. And even in some cases, gaming could be a cash business, so it could pay good dividends. So it's also an attractive opportunity for investors to acquire such companies and just pay dividends. It's not aligned well with VC approach, but for some strategic investors, that could be a transformational point.
Yeah. And then you're mentioning more looking at like economics and again, this is something that we see a lot in pitch decks. The product being pitched, and if you see one pitch deck, you can form an opinion on that particular game. If you see, as most of the people here do, you probably see in the hundreds of pitch decks a year. Like many in the hundreds a year, which also means you're seeing a lot of the same type of games being pitched. So I would imagine that right now, where you have kind of more opportunity to be more selective in what you pick, that the bar is being raised, I would imagine, a little bit in terms of the content that as a game developer that you're kind of working on. How do you kind of make that stand out? Because what's the point of bringing the 15th iteration of a game that has been moderately successful on Steam and bring yet another one? How are you kind of looking at kind of that selection process? Has that seen any changes compared to, say, 2 years ago? And how do you kind of try to assess which games you think are commercially kind of viable or successful? Curious to have some thoughts on that.
There's an interesting thing. So our portfolio, our deal flow is almost doubled in the last year. And we see much more PC and console opportunities right now. And we're kind of shifting our focus a little bit towards PC and consoles. And to be honest, I see much more, experimental and innovative pitches, innovative companies and games on PC and consoles than on mobile now. Which is a shame because I'm mobile native and I started my career in mobile, and we originally been focused on mobile solely. And I think like mobile game design thing is kind of stagnating right now, and it's impossible to succeed with another match-3 game because there are super large companies with super successful products, and it's almost impossible to penetrate this market. And with all the challenges with IDFA and marketing, now we see more potential in PC and consoles.
Yeah, so for example, if you were to look at kind of mobile, so Caglar, within your group you have kind of a wider ecosystem of businesses. So you're probably kind of on the content side as well as on the monetization side. Do you see kind of more opportunities or different opportunities when it's about mobile? And I'd like to hear a bit more from Kinga on the PC market, because I know that's your space.
Yeah, I think especially with all the crazy cost per install prices, the user acquisition prices, it's getting really, really difficult. Even if you have a great game, to be able to scale that game, you need a lot of money. So, and raising the money means giving away equity. So to be able to scale the game, and at the end of the day, when the market, you don't know when the market will be mature. So that's why I can definitely agree on PC console, and it's more predictable. So, and there's still a lot of demand there from the users for PC console games. And at Ionic, for instance, we don't only focus on mobile or, a genre. So we are super open, and we have console, PC, and mobile games. So we just look at the team, the profitability of the game, and this is it actually. So I think really, and especially one of our portfolio companies, Dreams, they are very strong in VR. And with the latest announcement of Apple, I think we will see also more games shifting into this direction. So the thing is that mobile used to be so strong and in our heads, like there's only mobile games out there, but there's way more than mobile games. And and I think everyone, especially the investors, also the game developers, should also look left and right. What else? What's there beside mobile games and hyper casual games? So I think there's a lot more than that.
Yeah.
I think right now it's a little bit in the moment when the trend in premium is going from one to another. Like, like when we meet in Spain and on Gamescom last year, I would totally say survival games are the trend. Like a lot of publishers was looking for that. A lot of developers are pitching survival games at that time. Right now, I think we are switching. There are a little bit horrors coming, but I'm not sure if it will be the trend, as I think horror is a little bit hard genre, especially on my point of the investment when I don't have playable version sometimes. We invest really early, then I have to make the decision based by not on the real game. I have to make the decision on the pitch deck, on some part of the work to see if that jump scares work, which is hard. But it can be also going in different genres. I think right now there are different changes in that, but I'm not really big with going with the trend. I'm never just investing in the company because it's the trend, because trend is now. And in 3 years, when we will end the game, it will be there or it won't be there. You never know if it will last that long.
Yeah, so rather than looking at kind of what's trending now, I mean, with development lead times of like a good 2 years, then you kind of have to kind of be ahead of the curve. And Barış, how are you seeing that in? I mean, you're also kind of looking at kind of Web3, if I understand it correctly. That is a market where trends have gone all over the place. And what is your kind of your feeling about that segment of the market, and how do you see that kind of which direction do you see that moving?
Well, obviously, Web3 market is like at the bottom. So that means for me it's a good period for development. So always people, common public jump on the train when the market is hype, but there is always up and downs. Right now we are facing the down, so it's an ideal period for me, for the companies to develop their products, to polish their products and be ready when the market comes. Of course, in that case, the companies should be healthy. They should not be fundraising in a couple of months period. But obviously, the market will come again, and then we will be talking Web3 again and again. Nowadays, we don't talk much, but it will come obviously, because, I mean, historically, we see always major shifts in the gaming industry, and these shifts mostly don't cannibalize the other segments. They just put on top of the industries like web, PC, console, mobile, smartphones, before feature phones, now smartphones, in smartphones, online features like MMORPGs. The first smartphones was more casual, simple games, but generating good money. Then RPGs came, then MMOs came. So always major shifts and always put on top of the market and the market grew together with that. I think Web3 is one of the major verticals like this. So eventually it will be popular, it will be generating good revenue. To be honest, I don't know how it will generate. So the companies will find it out. But obviously it will generate because it's attracting millions.
Yeah.
The previous version of the Web3 games, they were just only money-oriented. Fun was the missing part. In my opinion, the next era, we will see lots of fun Web3 games covering the monetization side as well. That's my expectation. That's why we are still investing in that type of healthy companies because a year or 1.5 year period, we will be talking the startups from these Web3 companies.
Okay, good. So maybe it's a good time also to take some questions from the audience, because from what I'm hearing is, yes, the market has gone down, but in a way for investors, that's actually a good opportunity to kind of maybe take it a little bit slower, be a bit more selective, and start investing in those companies that are going to do well in a few years' time. And I think that's also where kind of the challenge in a very positive way is for game developers. Like, if you're able to kind of come up with kind of pitch an idea that is different, that is kind of pushing the envelope, and if you get that funded, then you're probably onto something. So I would like to kind of open up for questions from the room. Salad, I think there's a microphone around. Yeah. So. I would say this is your opportunity to ask. So any questions, if it is related to investment, obviously, I think now is the kind of a good opportunity to throw those at us.
Hey guys, thanks for the awesome discussion. So basically, my question is, what do you think about a social gaming? I'm thinking about the game studio who is creating the games for WeChat, for a Facebook gaming, Kakao gaming industry, or maybe the Telegram right now. So what do you think about the perspective of the social gaming market, and how do you see it from an investor perspective?
Okay, who would like to take this one?
Did I get it right? So you're asking about social games? Right. Can you guys repeat that?
So
you're publishing games on social platforms, or what was exactly?
So now we are building a platform to launch your game inside the Telegram social network. So we have a lot of gaming studios who is trying themselves on the social platforms, like the Facebook gaming or the Kakao gaming, WeChat gaming, and they all are struggling with how to get investments from the VC. So that's why I'm asking. So is it possible to get a funding from the VC, from the studios who is just launching the games as other social platforms?
Okay, I think web games and social games are definitely not the hottest topic right now. But I think if you, with your web games or social games, somehow able to overcome user acquisition challenges that we currently experiencing on mobile, like for instance, you can track your users, you can acquire users, or you can avoid paying 30% cut to platforms, and that will be your kind of USP in competition. And you could, provide economical reasons why should we invest in a web game or a social network game. Definitely, why not? And especially now, when we have rich web applications that could be, could be kind of installed on your iPhone through the link, and you will not see any difference if you play in a native game or a web game. But people would not be paying this 30% tax to Apple or Google. That could be, death and life difference, like, because 30%, it could be your margin, like you have your payback on your ad spend or not. So if you know how to utilize that, not because you just want to create web games or social games, and there is a kind of economical underlying base onto that, definitely why not? But the thing is that why social games kind of not died but declined, because social networks, they killed social discovery and they want advertisement to be on their platforms. So they killed the social graph, they killed all the virality, so it doesn't work anymore. So now it relies on user acquisition, and so the thing is, like, are you able to hack user acquisition for social and web games? If yes, yeah, that's possible. If not, mobile may be, still more interesting.
Yeah, hello. Thank you for your discussion. So you have covered some potential trends on the content side, like in PC and mobile. And my question is about AI. So do you think that there is potential for investors in AI right now?
From my perspective, as we invest only in game developers, we don't invest in tools. I would say AI is a tool. It's a tool that can be used by the developers to build games better, faster, cheaper. And that's my perspective. For me, AI is the thing which makes that three things for me. The team can deliver game faster, cheaper, and in better quality.
Yeah, let me also add. We are investing AI tools. I agree it's a tool that the developers use, but we see lots of opportunity there, especially content creation, digital marketing optimization, things like this, creatives, user acquisition, growth. AI can be used at any case. Already we see lots of tools are used among our portfolio companies, and we are already invested in a couple of AI tools. But we will see more investment in that area. But of course, we should remember many startups put the AI keyword in their pitch text. That's not what we are looking for.
Yeah, I mean, and this is what a lot of investors would call. I mean, we've seen it with blockchain and Web3 sprinkle. Just put it in the pitch deck, and you can try to up your valuation. We're seeing some of that with AI, but then again, we're also seeing some companies that are like really pushing the technological boundaries by kind of using AI. I mean, and I think here's also a little bit of a difference between trying to come with some kind of ChatGPT type of application. I don't think that's kind of really pushing it on AI, but we've seen startups who are using AI, for example, to kind of increase the speed in real-time 3D rendering by factor 10. I mean, yes, that's something where we can see tremendous value being added, because that's kind of shortening production times, not just in games, but in any type of kind of cinematics. So I'd say those kind of applications, you will find kind of investors, and you probably will find kind of specialized tech investors slightly outside of gaming with an appetite for those type of applications as well, because in many cases, if that product works, it's for any type of digital media. Yeah.
Let me also add one point regarding the AI. There are also some companies, some tools, they are using the generative AI, but it's just a front end. So I think it's useful for the companies, and it's a good lifestyle business because you can generate some good revenue, but they are not our potential targets for investment.
Yeah, I think that means we have one more question. Yeah. One in the back.
Okay, thank you for the panel. I'm I'm come from Japan and I'm working for the incubation program. I have one question. What is the, how can I say, the best way to, how can I say, I understand that, how can I say, the WePlay ventures already have the accelerators, right? And I would like to ask you, the other investors, what is the, how can I say, the best way to, how can I say, interact with the incubators and accelerators? Yeah.
Yeah, actually WePlay Ventures just don't have. Yes. Accelerator program, our one of the step actually. Yeah. Accelerator program part is actually before the one step for the investment. This step is really important for the gaming studios. Why? Because when we invest in the one gaming studio, we use smart money model really seriously. Because they need to some support about the business part or legal part or financial or game publish strategies. Everybody needs some different support actually, and we giving this support for our portfolio companies. But when we invest in the one gaming studio and when we try to transfer to this know-how and this support, it takes a time. Some of them it's take 1 month, some of them it's 3 months, 2 months, it change. But it means for the gaming studios, it spent money and time. So we wanted to, these startups, these gaming studios can use your financial or your investment, it's really useful. So we wanted to be ready for the use to this investment. So that's the reason actually why we established this acceleration program. And also this is another way for the networking part, because we invited some sector professionals from different companies. For example, some publishers giving the marketing education, some big gaming companies, for example, EA Games, some professional giving some strategies for these gaming studios. This networking part and this know-how transfer, it's really valuable for the early stage gaming studios. So we wanted to give this know-how for the gaming studios because we wanted to support the whole ecosystem, all sector. Because when the market increase, everybody can win too much actually. That's the main reason.
Right, I think that's it in terms of time for questions. If you have questions, just ambush any of us right after this talk. I mean, best thing to do while everyone is here. Thank you very much, Sarah, for organizing.